Panel, turning to all of you, and maybe Tom, as you're sitting right here, we'll start with what do you think we know about the economy and the markets as we enter now the next chapter, the next period of time?
Oh, well, the stock market is clearly trying to figure out the path of the economy going forward, because I think it's well socialized that economic data for the next 3 quarters is going to be polluted by not only the tariffs, but some of the bullwhip effects and the distortions that have been introduced.
For the next 3 quarters?
Yes.
9 more months of a lack of clarity?
Yes, because I think at the core, I think the stock market's trying to figure out, is this a dip in noisiness, but we exit 2026 in better shape? If that's the case, then equities would have already made their lows at 48.35 on April 7th, because that was sheer panic and dislocation. But, of course, if we don't get trade visibility, and so 2026 looks like we're dragging for another 2 or 3 quarters into 2026, then, of course, the stock market is going to have problems.
All right, so let's turn to the gentleman at your left to maybe answer that question, Steve, this trillion-dollar question about what's going to happen with the economy. And interestingly enough, I was at a dinner last night with a bunch of supply chain executives.
Right.
Great timing. They were much more bearish than I thought. I would have put out, I asked around the table, what are the odds of a U.S. recession this year? And the average response was 75%.
Wow.
Yeah.
Well, can we just dispense with what the president put up there? This is the president's stock market. I mean, let's just be clear about that. I think every trader on every floor today would roll his or her eyes at that comment. And you can see that by looking at the stock market. And I think the key here is the extent to which the market rallied after the president's election. That was his stock market, too. I don't remember if he actually took credit for that. And really, the story is the extent to which the president has squandered that. And we actually have a chart that shows this. If you put up the chart of our outlook on GDP, look at where the market or the forecasters were saying GDP was going to be in the first quarter, 2%. Second quarter, 2%, third quarter, all the way across. And then you look at where it is now. And it's the back half that's the problem. You have this trade problem now. It bounces back next quarter because the front running goes away. And you can see that, folks, in the next chart. You can see my conclusion now is if I look at a piece of data and I can't see how it's infected by the tariff issue, I have to look harder, because almost every piece of data is. Folks, the next chart shows the impact, today's GDP and the contributions to GDP, and you can see how we got to minus 0.3%. They're so good in the back. They're just following me as I ad-lib this along. There is a 4.8% subtraction of net exports from GDP. Now,
5-point drag, yeah.
Some of that showed up in inventories, which was a 3% impact,
2.3,
but not all of it. Why? Because they end up in this trade purgatory called bonded warehouses.
It's as if you were at this dinner last night where we're all talking about bonded warehouses.
Okay. So it's out there. That stuff is out there somewhere. It could go back, but it doesn't. It's not in a place where it has to pay the tariffs yet. And then also the consumption number, which you saw was 1.2%, that was also affected by trade because people brought forward the tariff, the cars. They bought cars ahead of time, trying to get in front of the tariff. So we don't know exactly what's going on. Probably a bounce back next quarter. That is a result of the trade, the front running unwinding. And then maybe by the third quarter, we're into understanding what's really going on.
Kathy, what if you were there, you can answer the question now. What do you think the odds of a recession are this year? Do you think they're as high as 75%? We're all trying to answer this question so we can answer the question that Tom laid out about where the market bottom is.
Right.
Well, hi, Kelly. Our forecast is remarkably in line with what Steve just lined out. We're going to get arithmetically, at least, a bounce back in growth in the second quarter. In terms of GDP, it's the third quarter and even fourth quarter I worry about. But I think the third quarter is when it kind of comes together, and we could see, a decline in GDP. Now, is it actually recessionary? It may not be. That will depend on a lot of factors. Right now, we're kind of borderline in our forecast, whether we have a recession or not. And if we do, it's pretty mild because we still have good fundamentals with household balance sheets and corporate balance sheets. Really, what's going to call the tune is what kind of rollback do we get in the effective tariff rate, which shot up. Right now, it's like 35%. It went from 2.5 to over 30. We need to get that pared back. So those trade deals that they've talked about, they need to come pretty quickly.